Gang, I appreciate you guys for coming through to the Swaggy Academy channel. I'm your host. If you don't know who I am, obviously Swaggy C, full-time day trader. Been trading market for the last 5 or 6 years, and I've grown this channel in the last 5 months, 4.5, I believe, same thing, to where it is now. And I'm very proud of myself and my videographer Austin for being as consistent. You know, I started with recording my own videos, propped up, editing myself, throwing it out there. Once I got to 30,000 subscribers, I thought it'd be time to take the content up another level. Got Austin on board, and we've skyrocketed this whole thing. And now you guys are getting top-notch quality every single time. So right now, as usual, I am breaking down the market for you guys, and I'm hoping these little 10, 15, 20-minute segments that I have after Secure the Swag or before Secure the Swag, when they post, really helps elevate your game as much as it can, because I know how difficult it can be to learn from YouTube, because the videos are all sorts of places as opposed to an actual course or academy that's all structured. But doing the best we can for those who haven't gotten my course yet but are struggling with money and finances. Don't get my course, just stay on YouTube. I'd rather you guys save your capital if you're running low and learn on YouTube. Now, if you have money and you're cool and you're ready to learn and take it up another level, go to the academy. It's all structured. But here, I'm doing the best I can to balance out Secure the Swag, Act Swaggy C, market breakdowns, here's a subject, my life, interviews. It's like, you know what I mean? My page is pure entrepreneurial based. So I hope this video helps you guys out a lot. And also, if you guys haven't been paying attention, where me and Austin are obviously redoing the whole academy. We're probably creating maybe 100 to 150 videos. It's a lot of videos, but it's a lot of content for you guys to actually learn. It's all structured in order, and the price is gonna go insanely high. Like I said, last week, I wouldn't say insanely high. It's gonna go, relatively higher. But for the people who's already in my academy in the different tiers, no matter what it is, they're just gonna get crossed over. Even if the price that they paid for is way less than what the price is now, doesn't matter, they just get transferred over. So I wouldn't wait for that new content to come out unless you can, pay that new price that it's gonna be. I'm not sure exactly what it's gonna be yet. I just know it's not gonna be anywhere close to what it is now. Because I'm delivering so much content and value, I've partnered up with Eric Thomas. Me and Austin are delivering videos, not just on QuickTime Player, but on a 4K detail. It's a lot of dope content, and I feel like the value you guys are getting is gonna be insane. So make sure you go to my website, www.theswagacademy.com, to actually learn deeper how to trade as opposed to just these YouTube videos. If you have any questions, make sure you let me know in the comments below. Make sure you subscribe to the channel too. We're on this goal and pace to 100K. We got 30K left. We're at 70.5 right now. So about 30K left till we hit our goal, and then we're gonna run it up some more. But make sure you like the video, subscribe, comment, and let me know what videos you guys wanna see next. That's not around Secure the Swag or Act Swaggy C, but the next market breakdown video you want to see. So I'll holler at you guys, and enjoy the video. Let's talk about it. Let's talk about it. Let's talk about it. We got gold right here, and gold, if you are trading gold or somewhere even remotely close to it, you see how high it's been. It's the highest it's been ever. Like, even going all the way back in time, let's go back to the monthly time frame. Like, just looking back at this, like, it's never been as high as it is now, ever. And we all know, when price reached significant highs or new highs, and I don't mean new highs in the sense of, okay, new highs from 2016, like a few years ago. No, new highs ever. Chances are you'll get a huge wick eventually, and price will come back down and come back to its quote unquote senses, and then eventually start to trade up there. So gold has been just on since for the last month. I would say actually for the last few months, it's just been constantly going up and up and up and up and up, which is why gold is my favorite pair. You see all the pairs that I'm trading, it's always my number one pair right there, because it is the most volatile out of all the pairs that I do trade. I wouldn't say it's as volatile as like a US 30, but I don't really trade US 30 too much as opposed to actual gold. So just looking at gold, just for example. So right now, the last day, 1, 2, 3, 4, even though we have an hour and 50 minutes left of this 4-hour candle, the last 4-hour candles, even 5, even with this, drop down right here, has been consolidating within this high level of I would say 1950, even though it's up here. Nah, 1945, let's be accurate. 1945 to about 1930. So 150 pip range right now that gold is trading in. So what you should be mindful of is gold reached significant highs. It's gonna come back down eventually. It's just a matter of if it's going to get like it's gonna wick this 1950, because I do know, like I said, I know how gold moves in levels and how it likes to trade in. 1950, I wouldn't be surprised if price came up here, another consolidation wicked here, and then came back down. But I do think long term gold is heading up, but right now we may look for a pullback. Like, I don't know, like I'd be shocked if gold continued to, let me like refresh this, push all the way up. Like this is 1, 2, 3, 4, 5, 6, 7 last week, straight bullish, and then continue all the way back up. I do think gold will hit 2,000, but I do think it's going to come in the form of some fundamental announcement where it'll push gold up, way up here to 2,000, but it'll be a wick and it'll shoot back down. When I say shoot back down, I don't mean it's going to shoot all the way back down. No, hell no. Gold is going to stay, high for a while. When I say pull back, I do mean something along the lines of, let's say if it pulls back now, along the lines of coming back, hopefully the moving averages, come up and it retests the moving average and then it pulls back up, something along those lines. Or if it comes up and wicks 2,000, comes back down, retests this 1950 level, or a little bit lower, and which would be the top of this range, the 1945 to 1930 consolidation area we're in right now, and then pulling back up. But I do think gold is heading up on the long term. At the end of the day, you got to realize where gold is pegged to. And I don't mean like the exact word pegged, but it's negatively correlated with the US dollar. So we look at the DXY and look what the DXY has been doing. It has been dropping, the last, similar to gold, the last few months. You know what I mean? So as long as the DXY heads down, gold should be heading up, of course. This DXY looks crazy. Like it's like the US dollar just dropping and dropping and dropping. It broke past this, level of support right here, major level where it kept reversing and a big wick and a reverse, and now it just broke past it, closed below. Clearly, we're gonna continue heading down, and obviously this will be the next one right here, rectangle, this area right here, and it looks like price is closing below it. I wouldn't say it's official close yet. We still got, this is a weekly, so we still got 4 days and 4 hours left to see if we can close. In this scenario, I would want to see some type of long-term close. I would want a weekly close on this one, only because it's a DXY, and I want to see long-term what it's doing. Now, I said this in the webinar yesterday in my Tier 2 Academy. I said, understand what type of trader you are. If you are a scalper, you should not be looking for weekly closes. If you are an intraday trader, you can look at weekly closers, but you should be really looking at, just look at it for a quick second, but really, honing in on this 4 hour, 2 hour time frame. You know what I mean? And if you are a swing trader, you should be trading 4 hour and up. You know what I mean? It just depends what type of trader you are. So first, understand what type of trader you are. For me, I'm an intraday / swing trader. I don't really scout, but I am an intraday trader where I do trade, like day trade from day to day, and I'm a swing trader where I will hold it for some time as well. But I do want to see a weekly close right here, because if I can get a weekly close just like here, then chances are we will head not only just here, but we will head all the way down here back to this 89 level with the US dollar, the DXY. But back to gold. That's the whole point of this video. Actual gold and what it's doing right now. So gold is pushing all the way up, and it looks like it's consolidating right here. So what we want to do is draw a consolidation range right here and just see what it wants to do, see how it likes to play out, because what you can do is mimic the range and clone the range. Let me get this. Let me clone it. Boom. Bring it down. Bring it down right. I don't know why it's not. Did this yesterday. I don't know why it's not. Let me grab. There we go. Either there or same as above. Kind of see exactly where gold wants to head to, just mimicking the range and seeing what it wants to do. It just really depends. I do, like I said, see it consolidating, coming and then coming down a little bit. But if it does go up, I honestly think if it breaks above this 1950 level right here, it's gonna say screw this range and then shoot all the way up to this 2,000 level. Gold is itching for this level. It's never been here ever, 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 ever. And the fact that it even got to 1900 and 1850 even shocked a lot of people. Let me just delete all these drawing tools. Remove drawing. So just be mindful on how you feel about gold. Just monitor, and this is what I mean by actually trading gold. Do not trade gold if you are a new trader or you've only been trading for a few months. Stay away from it. This is for my people who've been trading for some time. And like I said, it's my favorite pair, so I break it down. I can easily go to a beginner pair, but you got to understand how the pip count move, because if you have a small account and your gold is not even your gold, your stop loss. Let's say you get in right now, right, and your stop loss is right here, or even right here. This right here, this to here is not, 20 pips or 10 pips. Like, the 1935 to 1925 is not, 10 pips where it's like, oh, it's just a 10 pip drop. That is 100 pips, flat out. Like, can you afford to have that 100 pip stop loss, even though it's just right here? It seems so small, you know what I mean? Like, that, like, gold moves so crazy. Like, this whole consolidation, this is a 150 pip consolidation range on most time frames, because, like, you see how it's at 1940 as opposed to 1.72000, like, Australia dollar. It would be a 15 pip, 20 pip, 30 pip consolidation. This is a 150 pip consolidation range from here to here. So just be mindful when you're trading gold, because gold is nothing to play with. You know what I mean? If you think you can come in gold with a $200 account and just trade it, you're sadly mistaken. I would stay off of that and start focusing on the majors like AUD USD, which basically does the exact same thing as gold. Not entirely, but it is positively correlated with gold. Not 100%, but it's positively correlated due to Australia's work with actual gold in general, with their country. But if you, like I said, I'm not really analyzing all of these pairs right now. I just want to focus on gold. But Aussie dollar, I do have Aussie dollar going up. It is finally breaking past this 70 range, which we've been waiting for some time now. All these boom retests come down, retest, can't break, and it finally broke above and closed above. I can obviously delete this. Don't need this no more. Don't need this no more. And don't need this no more as well. We just got to see exactly where Aussie dollar is going to go, because obviously we had our little first box right here. We have one right here as well, which obviously is stopped at. And this is like a point of emphasis for you guys to know. Obviously, is stopping off this resistance right here. And if we can break above, we honestly can see. I wouldn't even say 70. Yeah, I would say 72,500 first, but I'm looking for 75 eventually. Like, obviously, I still trade, with the key levels. So obviously, somewhere between this, whole liquidity level, this entire level right here. But if we break above this, which I'm looking for, and you can obviously trade before it even gets there. Don't wait and be like, oh, wait for it to break this box. This is a whole 110 pips, 100 pip move. You can find an entry in between there. But at this 75 level, I am looking for Aussie dollar to head way up here. I do want to retest. I'm going down to the 2 hour and actually show you guys intraday trading. Like a 2 hour time frame. See, this is a big level, which is why I'm saying you got to figure out what type of trader you are, and figure out how exactly you want to trade. This is the 70 level that we were aiming for and we're looking at right now. Let me actually refresh this page and get a little closer right now. So we look at the daily, you start on the daily, and you analyze down. We see on the daily that price is heading all the way up. The moving averages are up. Price came here, stopped at this little level right here, pulled back down, bounced off the moving average. That could have been your entry right there. Whenever price bounces off a moving average, enter. Because chances are price is going to continue all the way back up. Because a moving average is different from support or resistance. Price always has to retest support, retest resistance. We all know that. But when price bounces off a moving average and it can't break the moving average, then that's a little different. You feel what I'm saying? So bounce with the moving average, enter here. Your stop loss is right below here, and now we can bring this up. What am I doing? X this off. We can bring this up. We can even actually delete this. We just know this was the highest point, and we have it going to 72,500 right now. And then after that, that is our first take profit for me, in my opinion, for AUD USD. If we were to get in right here, long there, short here. It's a very tight stop loss. I don't know what type of risk to reward it is, but it has to be very tight. 1 to 8. So I'm gonna give you guys some lessons as well. I'm gonna try to go to a random time frame. Let me actually go to a random AUD USD chart. No, another one. Yeah, cool. Get you guys some tutors right now. Quick pointers. If price, let's see, bring this over a little bit. There you go. If price bounces off a moving average and rejects it, enter. If price rejects off of it. Because chances are that's not the only confluence. You know what I mean? Chances are that's clearly not the only confluence. It's going to be like it bounced off the moving average, but then it created like, a big Maribozu candle right afterwards, or a bullish engulfing, and it did that right, above a support level. You know what I mean? Like it's going to be a bunch of confluences, but this should be like, it's a trick where it's like people don't really look for rejects off the moving averages, and people forget to realize that a moving average is a moving trend line. You know what I mean? Moving support, moving resistance, like it just moves constantly, and the price bounces off that. Enter. Don't second guess yourself. You don't want to second guess yourself at all, because like the reason people aren't profitable because they are not confident. You know what I mean? Like it's like you can learn more technical analysis stuff, which is great, but this is why I put like a focus on psychology. The more focused you are with with your psychology, the more confident you are, the more you're just like, all right, cool. You got to stay disciplined and confident. You're like, all right, cool. I lost this trade. Doesn't phase me at all. I won this trade. All right, cool, good win. Let's keep it going. Let's run it up. You don't want to be like, damn, like I just lost this trade, because you don't ever want to trade with money you can afford to lose. You know what I mean? That's the whole point of the market. Like if losing $100 or $200 is gonna make or break you, you shouldn't be trading in the market. Period. You know what I mean? So you got to be mindful of what you're trading, aka stay patient and disciplined. I'm bugging right now. Price risk off a moving average, enter. Don't second guess yourself, and trade pairs that make sense. If you have a small account, don't be trying to trade gold. Focus on the majors. Understand, learn the process, love the process, love the process. How many times I gotta say that? Love the process of trading before you actually start trading, because if you come in chasing the money and be like, oh, okay, I just started trading, now I wanna make X amount of dollars by next week, you just started trading, or you just started trading a few months ago. Like you haven't put 2-3 years in. Like if you put 2-3 years in and you're still not making profit, then it's like, all right, what am I doing wrong? Like, what's up? Like, we gotta figure some things out. But if you're like 3 months in and 4 months in and you're not making profit, so what? It took me a year and a half, 2 years to, get it all jotted down. And it took me an extra year to scale my profit up. You know what I mean? So these are just 3 little quick tips I can, tips. I'm saying tricks, quick tips I can help you guys with to make your trading better. But I just wanted to analyze gold really quick because it's been heavy on my mind and I've been actually trading it. You know what I mean? Like I've been holding off on trading a little bit because I've been making secure the swag, and I've been, I'm hiring employees for, the business, and I'm making sure everything is situated at home. But I just saw how good gold looked yesterday, and I had to get in. Like it just looked too good. But stay tuned for all the updates we have with the academy as well, with the new tiers and the new website that's coming out in a month. It's going to be insane. I'm going into full detail with everything. And I hope this video helped you guys' trading and how to break down a market. And to kind of overwrap it really quick, again, the biggest thing about this is if you're a scalper, stop looking on the weekly and the monthly. If you're an intraday trader, stop waiting for like if you only trade and hold your trades for 4 hours or 5 hours, stop holding on, like looking at the weekly and the monthly time frame. Be like, all right, I'm on the monthly time frame, and you trade day to day. Like from right here, this was 2019. Like June of 2019, this takes forever. This has like no benefit to you whatsoever. You're better off staying on like a daily at the highest, but the 4 hour and the 2 hour and even the 1 hour to really trade, since you're only holding in for a few hours, and enter on the 15-minute. Now if you're a swing trader, of course 2 hour, 4 hour and up. You know what I mean? So I just hope those little tips helped you guys real quick in analyzing the market. GU is still pushing up as well, which is very amazing, which I love GU. Hopefully GU can hit 130, which I do believe it will. Again, like I said, bounce off the moving average, bounce off the look at this. Like all these bounces off of the moving average and pulling up. And again, understand that just because a wick goes below support and resistance or below a moving average doesn't mean it broke. The body is still above, body above, body above, body above, body above. Bounce off the moving average, go up, bounce off the moving average, and the support level heading up. Like, look at all of these tips and tricks. It's repetition. It's the same thing over and over again. Look at the bounce, and then look, it's gonna head up. And this is where you gotta understand, put everything together. Because I'm not gonna explain it right here. I got a bunch of videos that explain key levels, but I do have GU heading to 1.30 clearly. And it makes me happy that my second favorite pair is doing what it's supposed to do, you know what I'm saying? And GA, I don't even know what GA is doing right now. We got a huge wick. We're on to the daily and 4 hour. We got a huge hammer and then a mini morning star right here, deciding that it wants to push up. I see a kind of trend line here, but obviously doesn't mean too much with it. We broke this counter trend line. I can delete this. I can delete this. I can zoom in a little bit. I can obviously delete this as well. and we're trading on the 180 level. We got to see if we can clear this level right here. I'm gonna make this red as well, because usually, like I say all the time, if price has a trend line, whether it's a counter trend line or a real trend line, and it breaks it, it's gonna touch all the points that it broke. So boom, right here, touch it. If it breaks above here, guess where GA is going? Right to 182. So I hope all these little tips helped you guys out, and I will holla at you guys tomorrow. It's tomorrow. Tomorrow's Tuesday. So tomorrow for Secure the Swag episode 6.